Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, Mansion and other fine folks, to the Sunday Dispatch of the Black Letter, where we contemplate thoughts worth thinking as we try to navigate the upside-down, topsy-turvy world we find ourselves in, hopefully coming out on greener pastures on the other side, healthier, wealthier, and wiser. And in order to build our best lives, we need to make sense of the nonsensical. And so this morning, Monday morning, welcome to a new week. See how the markets do in a minute. But today, we're going to just focus on some Bitcoin news, cryptocurrency generally, Bitcoin specifically. We're going to look at the stock-to-flow model and some people disputing it, as well as benefits of Bitcoin under the current money printing regime, as well as looking at what one Tesla investor thinks Bitcoin could be worth in 5 to 10 years. Okay, let's get to it. Here in Forbes, serious warning issued over $300,000 Bitcoin stock-to-flow price model. And we've talked about the stock-to-flow model before, and we'll go through it again here a little bit. Bitcoin is on track to be one of the year's best performing assets despite a recent retraction, but that's not stopped Bitcoin bulls from fighting on Twitter. The Bitcoin price has climbed through much of 2020, adding some 40% with the bullish stock-to-flow model that predicts a massive $288,000 Bitcoin price before 2024, working like clockwork, in quotes, according to its anonymous creator. But not everyone agrees. The stock-to-flow pricing model created by anonymous Twitter user Plan B, who claims to be a Dutch institutional investor with a legal and quantitative finance background that manages around $100 billion in assets and tweets from the handle at 100 trillion USD, calculates a ratio based on the existing supply of an asset against how much is entering circulation. And as we've mentioned before, it works well for commodities such as gold here, with a larger stock-to-flow ratio of 62, meaning it would take 62 years of gold production to get the current gold stock. And silver has a stock-to-flow ratio of 22 years. Bitcoin stock-to-flow ratio is now 50, following Bitcoin's third halving earlier this year. And of course, it's decreasing every day, really, because every day new coins are being mined, which means that the number of new coins that are being mined, which is now static for the next 3.5 years or so until the next halving, is becoming a smaller and smaller percentage of the amount that has already been mined, of course. So it talks about Alex Kruger here, who's an economist and cryptocurrency analyst, and he says that Kruger, along with many other analysts in recent months, has warned the model is based on faulty comparisons and a spurious relationship between price and scarcity. However, he doesn't give any indication of how it's invalid, and of course that creates a problem. The whole model rests on the wrong assumption that there is cointegration, which is a long-running relationship between two or more variables. Kruger said, who explained that without cointegration, it's nonsensical to think that Bitcoin stock-to-flow, a number that goes up programmatically, and everybody knows what it will be at any point in time, can be used to predict price. And I think that's nonsense. That's not a valid argument against why the stock-to-flow model is not valid. I mean, the whole model rests on cointegration, a long-running relationship between two or more variables, and so far it's worked well for gold to some degree. Of course, it's not perfectly predictive. Nothing is of the future, and we will find out if Plan B stock-to-flow model holds up long-term. But currently, it's been quite accurate. But this doesn't really negate that accuracy or why stock-to-flow is not going to work in the future. But there you have it. Clipston, who is, Corey Clipston, who is the chief executive of Bitcoin buying app Swan Bitcoin, said via Telegram he supported the stock-to-flow pricing model until late 2019 when he looked into the models and realized they're invalid and have zero predictive power, which is untrue. If you've looked at the model itself, it actually is very valid so far and continues to be valid. I don't know who these clowns are, honestly. This is maybe they're just looking for a bit of spotlight or something, but it just seems nonsensical. They offer no, you can read this article for yourself, but they offer no specific evidence to the contrary. Here's an article that's talking about stores of wealth and how it seems to work for stock-to-flow. This has been Bitcoin over time. As you can see, it's been sort of fairly accurate. And this is silver, diamonds, gold, and real estate. So, I mean, it does seem to be within that realm. But who knows, over time, we will see if how accurate remains to be seen. Of course, at some point, it's likely to break down in the decades ahead because otherwise, Bitcoin eventually will become worth an infinite amount, of course, because it's hard capped. And that's when the stock-to-flow model sort of breaks down if there is no new amount being able to be mined, then of course the whole model shoots to infinity, at least of the price of the asset underlying it. So you can have a read of this if you like, folks, but I thought it was interesting. Of course, I'm always looking to test my theses, but there's nothing in this article that gives me anything to sort of hang my hat on, if you will. There's no evidence here to the contrary of why Plan B's stock-to-flow model is not going to work or why it hasn't been working so far. Anyway, there you have it. Former Goldman Sachs VP, there is no government printing more Bitcoin, and this is why he likes it, obviously. Jason Urban, who we spoke about yesterday, I think, the CEO of Drawbridge Lending and a former trader at Goldman Sachs, explained during an interview how both gold and Bitcoin can protect investors against increases in volatility. David Lynn of Kitco News here interviewed Jason Urban. Lynn then asked Urban, why is this time even worse than the Great Recession? And Urban replied, well, I think because in 2008 it was a banking crisis. It was concentrated in a handful of people. Now you're seeing a broader crisis when unemployment levels are where they're at, when large segments of the population are out of work with no hope of going back to work. That's going to change spending habits. That's going to be changing consumption habits. All of those things are going to be different. In 2008, people were worried about losing their homes or their second homes or the third homes or things of that nature. Now you have people who don't know necessarily if the stimulus check doesn't come, where their next meal is coming from. And I think that kind of fear changes behaviors across, everything. Anyway, not talking very well and accurately or eruditely. And also there's a problem here with this when he's talking about, second homes or third homes. That was not the catastrophe. It wasn't with people who had a second home in Martha's Vineyard or other such thing. And of course, being a Goldman Sachs trader, he probably has made a ton of money. And so he's lost touch with reality. People with second, third homes that had given them up were not the ones who were ultimately facing eviction and homelessness. It was the folks who had mortgaged homes that they probably couldn't afford in the first place. The banks shouldn't have given them the loans. These were people not with second or third homes. So anyway, it's a little ridiculous. That wasn't the problem. The problem was with people with their first homes and their primary residences. Anyway, this is the problem with some of these hedge funds guys. They make way too much money, have too little common sense, and are out of step with reality, of course, obviously. I think the biggest thing to look at is as a fixed finite supply similar to gold. Its scarcity is similar, and so because of that, there isn't a party or government actively working to devalue it. And so from that standpoint, I look at that and say that they're very similar to gold he's talking about. And they might be similar, but I think Bitcoin is better for a store of value because it's hard capped, whereas gold isn't, especially if we get into asteroid mining in the decades, next 30, 40, 50 years to come. Then, of course, the stock to flow model on gold is likely to become worthless or have to be reevaluated. As for Bitcoin's price volatility, Urban says that although Bitcoin's historic volatility is much higher than that of gold, it is worth remembering that the store of wealth factor works kind of in both ways, meaning that Bitcoin's high volatility could also help it go up a lot more than gold. That's a fair point. Urban believes that Bitcoin, just like gold, can be used to hedge against both inflation and the US dollar. And I think that's why we're in it, obviously being hard capped for sure. I think it's become pretty clear that regardless of which party is in power, they will be spending. And so from that standpoint, not really knowing where to place your bets tells me to be very defensive, in that in terms of what's happening on a global standard, on a global basis, it's a very similar concept. So given that volatility, given that uncertainty, I think it's better to preserve wealth before you end up losing wealth. And of course, I think what he's talking about here, obviously, both gold and Bitcoin as a preservation of wealth or stores of value. He would put 5 to 7.5% in physical gold and gold mining stocks and 5% in Bitcoin and or other digital assets. And I think those are valid responses as well. A major Tesla investor has predicted Bitcoin will be worth more than $1 trillion in under 10 years. And of course, he's talking about the market cap here, not one specific Bitcoin. And so I think, they talk about this fellow being extremely optimistic. And I think he's actually underselling Bitcoin. My opinion is that within the end of the decade, we'll see Bitcoin at $1 million per coin, which will give it a $21 trillion market cap, or roughly that. There'll probably be 19 million coins or so. So I guess there'll probably be 19 to $20 trillion market cap. So I'm obviously much more optimistic than he is. With a raft of established investors turning to Bitcoin this year as a potential hedge against the inflation they see coming as a result of unprecedented government spending and money printing, a prominent investor in electric car maker Tesla has said it expects Bitcoin's total value to balloon to between $1 and $5 trillion during the next 5 to 10 years. And I think it's going to get to probably $2 trillion by the end of next year, roughly, because that's when it'll be worth $100,000 or more per coin, in my opinion. And none of this is financial advice, of course, and DYR, do your own research. Bitcoin offers one of the most compelling risk-reward profiles among assets, as our analysis suggests it should scale from roughly $200 billion today to $1 to $5 trillion network capitalization during the next 5 to 10 years. ARK Invest's Director of Research, Yesin Almandra, wrote. I think that's on the low side. And of course, even if we have to wait until the end of the decade for it to become worth $100,000, that's still a 10x in 10 years, which is a phenomenal return. Anyway, so he's considered extremely, or she's considered extremely bullish. And so I wonder what I'm probably considered, maybe a lunatic perhaps. And of course, all of this is just best estimates and guesses, really. At the end of the day, the future will reveal itself, and some of us will be relatively accurate, and most of us probably will not be. But there you have it. I see great potential future for Bitcoin, certainly, and that's pretty much the sole place I'm putting my savings at the moment. Okay, let's take a look at the stock markets. All right, so we start in the stocks in the green. Obviously, I think must be some good news on Donald Trump, I would imagine, or perhaps maybe not bad news, and so we're sort of up somewhat. We'll see if that continues throughout the day. We'll check back tomorrow. Let's take a look at gold. Okay, and so gold sort of during another sort of consolidation phase, I guess, hanging around the 1900 level. We'll see if it's going to dip down or continue up from here. I think there's potential for both ways. However, I think gold is much better value at around $1,700, $1,800 an ounce, but I'm not sure if it'll get down there. We will see. We'll keep posted. And of course, much the same with the silver, hanging around $24 and looking like it could potentially be moving up again. I think silver is a much better buy at around $17, $18 if it gets down there. Perhaps it will, but who knows. In the meantime, I'm just holding on to my silver that I had bought originally, and we'll see where this goes. All right, onto the crypto coin market. Okay, we're up about almost 1.5% of the past 24 hours, $346 billion market cap, so not much movement. 5,897 coins for your purchase and pleasure. Bitcoin still dominant, above 57%. And you can see here, top 14 coins or so, not much happening. XRP is making a bit of a move. I think that's primarily because they had a patent, if I understand correctly, that they had been issued recently. That could be perhaps why. 2% on Polkadot. Otherwise, things are relatively flat. Whereas Stellar, well, Stellar's dropping. It's now at 19. I think when I was first investing in Stellar, I think it was up at around 14, number 14 in market cap. So not doing particularly well. Still hanging around 7 cents, nevertheless. NEM up 5.3%. Uniswap continues to be under pressure, obviously. There you have it, folks. All right, let's take a look at today's online oracle. Our trusty sidekick, the 8-ball economist, for today's most pressing question. All right, so one of the articles we were looking at earlier here, the Forbes article about serious warning issued over the stock-to-flow price model. I thought that would be an interesting question to ask the online oracle. Is Plan B stock-to-flow model valid for Bitcoin? I believe it is, at least probably for the next decade or two. Signs point to yes. Okay, so the online oracle agrees with me and doesn't agree with some of the others out there who are questioning Plan B's stock-to-flow model without obviously giving specific reasons as to why it's been invalidated, especially when currently it still seems to be relatively accurate. There you have it, folks. Thanks so much for joining me. I appreciate you. Have a great week ahead here. Remember, we're still in the weeds, and I would be encouraging you to pay down debt, screw away some savings, because I think the crash is going to come at some point. Who knows when? Probably towards the end of the year or early next year. So in the meantime, let's store some dry powder for when those good opportunities come. And remember to stay healthy out there, peaceful and compassionate. We're still all struggling, clearly. And I think we're entering the second wave here for this fall and winter flu season. So remain vigilant, washing hands, etc., etc. Remember, above all else, Dum Spiro, Sparrow.